Well, I mean, it's historically you can't say never.
No,
I'd make 2 points on that. I'd make 2 points on that. Number one, confiscation of gold has happened.
Yeah.
There's no reason to say that it will never happen again. However, the motivation for that right now, I would say, is very much lower than it was 80 years ago. I mean, it's 80 years today. FDR ordered the Executive Order 6102.
Okay.
The motivation is gone. There just isn't the same motivation for a government which is desperate for capital, for revenue, for money. There are much easier things to go after.
I think
low-hanging fruit.
What I was asking is more than if it would happen.
No, sure, but so that's one point to make.
Yeah.
The second one, if you own physical property overseas and your government says that you now cannot own that kind of property domestically, it's very difficult to see how they can confiscate your property overseas. Okay, what are they going to do? They're going to order a foreign government to seize that property to return to them, or they're now going to be interfering with the property laws in that destination.
Okay. So it's under the property laws of that country?
Well, that's where you own it. I mean, how physically are they going to go after it?
Yeah, okay.
I mean, it is a concern that a lot of gold investors have. Gold investors tend to be aware of history. They tend to read history certainly more than people who are bullish on the stock market do, I would say. So they are aware these kind of things happen. Exchange controls, I think, are probably a bigger risk, where you can no longer get money out of the country.
Right.
Having physical property already outside of your own borders, well in advance of those kind of problems, I think makes sense. If you look at Cyprus, where people now can't get money out of the country, if you need to have money outside of the country for any reason, well, it's now too late. The shutters have come down. You can't do that. You now have very strict controls on how much you can get out at any one time. If you'd already, in advance, in preparation, put a stock of your wealth overseas, and then the domestic shutters come down, it's very much easier, if you look at history, it's very much easier to get yourself out, to go and access that property in that foreign destination, or to control it from where you are. So on bullion vault, you can still sell your gold in Zurich, buy gold in Singapore with the money that you've just raised, or alternatively, to have your bank account changed, revalidated. It's a more involved process, but then of course you can then have the money returned from bullion vault to your new bank account that you've revalidated, in the event that the shutters have come down on your own domestic economy and you can no longer get money out that you need to do. It's important with exchange controls as well to remember that exchange controls don't stop money coming in. They stop money going out. So if you're anxious about what will happen to financial assets within your economy should the shutters come down, but in fact you're not planning on going anywhere, you'll continue to live in your home jurisdiction, in your home country, what you'll need is money to come in. That's never stopped by exchange controls. That's very welcome. Governments like money to come in during exchange controls. It's to stop you getting money out, which is the issue. So if you are concerned by that kind of action, I think the important decision to make is early and to put stuff overseas now. You want to put it somewhere where property rights, foreign property rights in particular, foreign investor rights are recognised and are clearly protected. So if you look at the jurisdictions that we use, Singapore, Zurich, London and New York, all of them have a strong, if imperfect, history of defending property rights. I don't think there's an absolute solution to that problem. The idea of confiscation and trying to second guess how governments are going to act in the future is, it's a risk that you can't defend against this absolutely. I don't think there is a 100% solution. But I do think that if you've got a portion of your savings, a portion of your wealth overseas, just for geographic diversification, a lot of people buy gold and silver for investment diversification because it's a different asset class from property or a different asset class from the stock market. Why not also have some geographic diversification as well? It doesn't cost you any more, and it might